Sorry about that. Call this meeting of this work session of the Anchors Assembly to order. We'll start with introductions. Mr. Gates.
Dean Gates, Assembly Council.
Fred Dice.
Alex Slivka, CFO.
Dean Thompson, outside regulatory counsel for ML&P and MOA.
Dan Dane, Concentric Energy Advisors.
Forrest Dunbar.
Eric Croft. Felix Rivera.
John Wellman.
Pete Peterson.
I think we'll stop there. If anyone else comes and testifies like you, Lee, we'll ask you to say it on the record. Is there anyone on the phone?
Christopher here.
One at a time. Chris, are you there?
I'm here. Chris Thompson.
Okay, who else is here?
Dick Green is online.
Great. Okay, let's see. Let's meet everyone. All right, well, let's see. We have a presentation, I believe, from Concentric Energy Advisors. You want to take it away?
I'll just introduce him. So Dan Dane with Concentric has been in the utilities, mergers, and acquisitions consulting business for 15 years. Prior to that, he was an accountant with Ernst & Young. He was retained by the municipality as outside consultant to advise us on the transaction, and he's going to present today his findings. In addition, as you know, Dean Thompson is our regulatory counsel, and also, of course, in the audience, people from Chugach as well as the administration. If you have any questions as we go through this, please feel free to bring them up.
Is this presentation available to the public somewhere?
It is, copies of it are at the back of the room. It is, I believe, also been posted on the website.
Do we have?
It hasn't been posted on our website yet, but we will post it with the other information this afternoon.
Thank you.
I'm not sure if the administration has posted it on the other websites.
I think we plan to, but we've all had a little bit of an administrative delay as a result of the earthquake over the weekend.
Sure.
The intent is to make it available on Power Alaska, or Powering, and also on Powering, and also on the other websites where the transaction documents are available.
Okay. Are you actually going to put it up on the screen? Okay. So we don't need the lights, Madam Clerk. Thank you. We'll just read through as we go through here. So please.
Take it away.
Okay. So thank you. I just want to, first of all, say thanks. I know you and the municipality have been under a lot since Friday in the earthquake, so I appreciate you giving me the opportunity to come here and present. My name is Dan Dane. Again, I'm a vice president with Concentric Energy Advisors, and I have a presentation here that I'm going to walk you through. I'll start on page 3, which is the agenda / table of contents, just to give you an overview of what I'm going to speak to. And certainly, as Alex said, if questions come up, feel free to interrupt me. If they come up in the flow of things, I'll take questions as they come, or at the end, we can also go through any remaining questions at that point. So in terms of what I'll speak to, I'm going to walk through what our scope of work was, what we were hired to do. I'll go through a little bit of the transaction process and some of the key points of the recent history from our perspective, just to provide us some context. And then I'll walk through the transaction, and there's really 4 primary components of the proposed transaction that I'm going to speak about. Those are the transaction value. I'm also going to talk about some financial considerations and risks related to the transaction. I'm going to walk through some of the rate implications of the transaction, and also talk about some of the employee considerations as well. And then I'll do a brief talk about the RCA approval standard and the process, so the potential next step in this transaction in terms of it being approved or reviewed and then potentially approved by the RCA. And then finally, I'll wrap up with, I want to line this transaction up with what the voters voted on in Proposition 10 to help you see how it compares to what the voters voted on, and then just sum it up with some of my findings and conclusions. So in terms of our scope of work, and just to give you a little bit of background on my company, Concentric Energy Advisors, we are a financial and economic advisory firm that specializes in utility mergers and acquisitions, and we also specialize in utility rate making. We were hired in June of this year, and the primary task for us was to perform an assessment of the commercial aspects of this transaction. And again, as I just spoke about with the agenda for today, looking at the value being transferred in the transaction, looking at financial considerations, and also looking at rates and employees and other considerations like that. And I have provided a brief overview of my firm as an appendix to the presentation, just a couple pages in there, a little bit more about Concentric. So I'm going to move to page 5, and this is certainly not the entire transaction process in history. I know this has been a transaction that's been in the works for many more years than we presented here. But just from our perspective and some of the key highlights from the most recent part of this process, we provided a timeline here starting with the Anchorage the Assembly passing AR 2017-235, which urged MOA and Chugach to explore a merger. Then looking at the bringing in of Goldman Sachs, the investment bank, to do an independent analysis of strategic alternatives for ML&P, as well as do some indicative valuation around the assets and the utility. Then forward to the passing of Ordinance AO 2018-1S, and which submitted Proposition 10 to the voters. And I'll talk a little bit more about sort of what that proposition was and how this transaction lines up with that proposition in a bit. And then once the voters approved Proposition 10, really over the course of the summer, the two parties coming together and negotiating a transaction term sheets were put forward in September, and the transaction agreements put forward in October. And I think just 2 data points I have here for your consideration is, one, the valuation range, the indicative valuation range that Goldman developed, which was in that range of $684 million to $1.142 billion. And this is a transaction that has a value, as I'll speak about in a minute, of over $1 billion. That puts it within the high end of the range of the Goldman Sachs valuation. And also we have some details here. MOA was approached by other parties, and we've listed them here, the other parties that submitted some form of indicative offer or some other form of interest. And I think what that does is it does apply some competitive pressure for the overall transaction in terms of the transaction that came together. So I think those are 2 data points that we want to provide that give us some context for the level of value achieved in the transaction. Moving on to page 6, the transaction is made up of 4 agreements. So there's the asset purchase and sale agreement, and I think you've had some time in other work sessions being briefed on what's in that agreement, but basically that's the contract that transfers the assets, those that are being transferred from MOA to Chugach. One asset that is not being included with the transfer in the asset purchase and sale agreement is the Eklutna generating station, but the power and the other attributes of that facility will be sold to Chugach over the term of a 35-year power purchase agreement, or PPA. And so that's another agreement that's part of the transaction. Chugach has agreed to make payments in lieu of taxes over a period of 50 years, and there's a separate agreement called the PILT agreement that describes the terms related to the calculation of those PILTs and other key terms related to them. And then finally, MOA's interest in the Beluga River unit will transfer with the sale of ML&P, and so there's an agreement for the Beluga River unit. And essentially what that agreement does is it streams the value that ML&P currently has from Beluga to ML&P customers, existing customers, through 2033. There are multiple components of value within the transaction, and I'll speak to some of the more quantifiable aspects, as well as some of those that are more on the qualitative end of the spectrum, less quantified. And so just to summarize those include an upfront payment from Chugach to MOA, PPA payments over the course of that contract, so again that's for the Eklutna power purchase agreement over 35 years, PILT payments to the municipality over 50 years. And then on the less quantifiable end of the spectrum there's terms related to employees and protections for employees, as well as protections for customers of ML&P in terms of rates and rates going forward. I'm moving to page 7, and this is an overview of the transaction, the elements of value in the transaction. So again, we have the upfront payment, which is $767.8 million, and that payment includes payment for the net book value of ML&P, so that's basically the net cost on the books of the utility, as well as cost for defeasance of debt. And then there is an purchase premium also within that upfront payment, and based on current expectations about where net book value will end up at the time of closing, that's approximately $24.1 million.
How much debt does ML&P have?
I believe it's forecast at the time of closing to have about $540 million.
Thank you.
Can I ask a question?
Yeah,
Oh,
go ahead,
please.
Mr. Weddleton.
So, could you flesh out this? PPA payments are based on true gas, avoided cost of power. They're not paying us a check. They're paid by electricity.
Well, the payments, the PPA has in it set amounts of payment that Chugach has to make annually, and that's a dollar amount. So that's being set now as part of the transaction. And Chugach will pay those regardless of what occurs when the contract's actually in place. And so there is a basis for those payments, though. They weren't, and that is what we mean there when we say about Chugach's avoided cost of power. So that's basically ascribing a value to those that the parties agree to is a reasonable indicative market value of the power for that facility.
Go ahead, Mr. Weldon.
Academic trees.
So if they're paying us a fixed amount for the power, if they don't use it all, what happens to them?
They would still, under the agreement, pay the fixed amount.
Chris, are you trying to speak? I'm sorry, Mr. Weldon. Chris, are you trying to speak to us?
I'm sorry, the mute button clicked out.
Okay. Go ahead, Mr. Weldon.
Why is it this conversation's not?
I hear what you said.
So I don't know
Yeah.
how much power they make, but if you guys electric said, oh, we only want half of it, now we can still making more. Just sell that anyway.
No, they're buying all of the power. So then it's on Chugach to determine, what to do with that power, essentially. So they've agreed to buy the output of the
It
facility.
wouldn't make sense for them to do anything less than take all the power that's generated, because then they could resell. If they're paid a fixed amount, they would resell it to the NBA or HA or something like that.
Right.
Mr. Weldon, please continue.
Sure. Okay, and then so we discussed the PPA payments, then there's also the PILT payments, and those are agreed to be paid over a course of 50 years. There is a formula for calculating them that mirrors the formula that's used today, and those payments are intended to replace the current MUSA payments, the MUSA payments that ML&P makes to the municipality. Okay, I'm going to move on to page 8. And this is a large transaction, and with any large transaction there are financial risks. And what we do at Concentric in terms of understanding financial risks is to first identify them, and then to identify any mitigating factors that help us provide bounds around what those risks are. And so in terms of the financial risks of this transaction, we've highlighted 2 here. And the first is financing, both in terms of its availability to Chugach to consummate the transaction, as well as the terms on which Chugach can borrow. And then also, once if the transaction moves forward, the ability of Chugach to meet its ongoing obligations. And again, from the municipality's perspective, that's primarily, from a financial perspective, the PILT and the PPA payments. And so, again, understanding the risks, then we want to move on to understand the bounds of those risks to help understand those mitigating factors in place. And I think one of the things we look to first at Concentric is the fact that Chugach is currently a very well-rated company in terms of its overall credit rating. And I'll get a little bit more into credit ratings and what they mean in a bit. And also, as a cooperative, Chugach has access to long-term, low-cost financing from lenders that specialize in lending to cooperatives. And so that's just sort of a threshold item that we consider in terms of evaluating the risks of the transaction. And then within the transaction itself, I'll step first to that first risk I identified, the financing risk. And Chugach does have, it's received letters from banks basically saying that they have high confidence in their ability to lend to Chugach at the time it's needed. Those are called high confidence or comfort letters. And then also in terms of Chugach's ongoing ability to meet its obligations under the transaction, we looked at a couple things. First of all, again, the fact that the company is currently very well rated and has had access historically to financing. And also, in terms of, again, looking within the transaction itself, the municipality is keeping the Eklutna facility, and so if Chugach were not to be able to perform under that agreement, the municipality has a security interest. They own the asset, and so that provides a source of risk mitigation in terms of the ongoing relationship between the municipality and the utility. And also, and I'll talk about this more as we go on, but the Regulatory Commission of Alaska also has jurisdiction over this transaction. The RCA must approve this transaction in order for it to move forward. And Chugach will make proposals in terms of its ability to recover the cost of the transaction in its application to the RCA. And so favorable approvals by the RCA will provide Chugach with some protection against any financial detriment associated with the transaction. One thing we also did as part of our due diligence was look at the credit rating agencies. So primarily that's Standard & Poor's, Moody's, and Fitch, to see what they had been saying about this transaction. They have not published final reports yet that state any action they may or may not take or how they view the transaction based on the agreements that were published. But initially, when the transaction was beginning to be announced and the voters were approving Proposition 10, the credit rating agencies did put out some information. And basically they did highlight that there are considerations here for the credit capacity of Chugach. Those are both positive and potentially negative. So there are factors that are in the positive column in terms of putting together a bigger utility of larger scope with potential for significant savings. And having certain economies of scale by virtue of being that large utility. And then on the credit risk side, Chugach will be financing this transaction with debt, and so that does have potential implications. It could pressure some of the company's credit metrics as they exist today, and I'll talk about those a little bit more in a minute.
I'm sorry, Mr. Welcome, you have a question?
So you're at 9. So what this last column, most recent Moody's assessment, is that?
Yeah, so let me walk through this table just to help you understand it, or to explain it a little bit better, because I know it's just it's some financial metrics and then ratios. So I do want to spend a little bit of time explaining it. And so again, and I'll just step back a little bit. And so when the credit rating agencies analyze a company, and there's an ongoing relationship between credit rating agencies and companies that issue debt. And so the credit rating agencies monitor the debt, they meet with management, they want to make sure that the ratings they're putting out are indicative of what of an accurate picture of the company's creditworthiness.
Can I ask on that? I mean,
yeah.
What is your assessment of the independence of those rating agencies after collapsing? There's a lot of sense that they weren't independent. Are they?
You know, they are independent. There was some of that talk after the Great Recession in the 07, 08, 09 timeframe, and so I think there were some fingers pointed at that time. They are independent agencies, though, and I think from that outcome where there was some question about their independence, I think they've had to take steps to make sure that they can even further prove that, to make sure that they are not, you know, they certainly don't want to be behind the ball in terms of credit ratings and making sure that they're providing an accurate picture for investors. But just to get back to your question, the credit rating agencies will look at both qualitative and quantitative factors, and it's not really a matter of just looking at a couple qualitative things and then running a bunch of numbers. Moody's, for instance, about 60% of their rating is based on qualitative factors. So they do look at things like what's the customer base like, what's the relationship of the company with its regulators, the RCA, you know, how has management been, those types of things. So they'll walk through that and they'll score companies based on that analysis. And they'll also run financial metrics analysis, which basically, to distill it down, it's a number of ratios and metrics that are designed to say, for the level of earnings the company has, for the level of cash flow the company generates, here's the amount of money they have to cover their debt obligations, so principal payments and interest payments. Because at the heart of the credit rating is basically establishing the risk of default. That's what credit ratings are really designed to do, is to help investors understand the riskiness of investment in debt instruments. And so I provide you here for Moody's their 5 primary metrics, and again, they're basically designed to give us information as the public or as investors about, for the earnings of the company, for the cash flow, how much of their, will they be able to cover their debt and interest payments. And they distill those down into metrics, and then the metrics where a company falls puts it in you know, certain ratings categories. So A rating, which is what Chugach is currently rated as. And the far rightmost column is Moody's most recent assessment. So this was pre-transaction. I think that was your specific question. And so that was where the rating, where Moody's specifically had quantified Chugach to be when they last performed their assessment. You know, as I spoke a minute ago, one of the risks here from a credit perspective is that the addition of debt can put pressure on these credit metrics. And so additional interest payments, additional debt on the balance sheet, et cetera, can pressure them. And that's what the credit rating agencies have found, and they've said that they haven't come out with specific findings in relation to the level at which they believe that will happen. But I think one of the takeaways that we have from this at Concentric is that Chugach currently has a lot of cushion within its A rating. So if you look at the far rightmost column, its credit metrics are well within that A rating. So pressure on credit metrics doesn't necessarily mean they're going to be bumped down in terms of their credit rating. It just means it could push them to the lower end of a range. And we also provided the next level down from Chugach, which is still considered an investment grade. So you've heard of investment grade versus high yield or non-investment grade companies, and you see that within the investment grade range of metrics, Chugach certainly has much more cushion in terms of that. Yes?
Yeah, Mr. Weddleton.
So when you're rating us, you're kind of giving us an evaluation of riskiness, not so much if they were lower their rating, they'd have to pay higher interest on the loans and so on. Is that, are you concerned about that, or you're just saying we're just
I think understanding the risk of pressure on credit metrics is our goal, and certainly all else equal, a lower rating does involve higher borrowing costs. A better rating or higher rating typically involves lower borrowing costs.
So what's the, I guess you just comparison, but if you drop from A to B, is that like
I don't have the specific percentages, but generally within the investment grade spectrum, so from BAA up till the highest AAA rating, that's generally thought of as one sort of larger ratings class, and so the spread between dropping from A to BAA is going to be less significant than, for instance, dropping from BAA down to BA, which is the sub-investment grade rating. So that's where you see the more step-type increases in borrowing costs. Because I think investment grade is generally thought of as being important, and often for lenders they will have requirements that borrowers be investment grade, or they may require some higher rating. But that typically is sort of that wider spectrum of where of considered a lower default risk.
Okay. Yeah, we need to move a little bit faster through this, I
Yep.
think, considering our time.
Okay.
Yep. Long questions again.
Sure. So I'll move down to page 10, and I want to provide you a little bit about context about current interest rates, just to help you provide a little bit more information. And we don't know the final terms at which Chugach will be able to borrow for this transaction. But interest rates are currently historically low. They have been historically low. So it's been generally a good time to be a borrower. But based on stronger conditions in the markets, the Federal Reserve has been a little bit less interventionist, and there's been a creeping up of interest rates recently, sort of starting with the shortest term rates, and then that puts pressure on longer term rates. But for us, the key takeaway here is that even with some of this recent increase, and thinking about sort of the next year or so, so the time when Chugach is likely to be accessing markets, forecasted conditions are still remain favorable within the next 4 quarters compared to longer term interest rates. And I have a chart here. I don't have the longer history going back, but that is above even where we are today, and for the most part above where the forecast is for the next year. And so page 11 is just a wrap-up of what I've just been discussing with financial considerations. So again, this is a transaction with strong overall value. There are risks to any large transaction, but I think they are understood, and we do believe there are mitigating factors in place based on what we know today about those financial risks. There could be credit implications, either positive or negative, and our assessment is consistent with what the credit rating agencies have been saying. And again, the RCA does have jurisdiction over this transaction and the ongoing rate making of Chugach post-transaction, and so favorable rate making treatment from the RCA does provide further protection for the financial capacity of the utility. All right, I'm going to move to a discussion of the rate implications of the transaction. And I think in summary, the conclusion is that the rate implications are consistent with Proposition 10. Chugach is committed not to raise base rates because of the transaction. And the agreement, I have some excerpts here in the presentation related to that. And again, Chugach has made that commitment, and they will also confirm annually to the municipality that they're in compliance with Proposition 10.
Can I ask a question on that?
Sure.
So this is something that John has pointed out to us in some other contexts. Sometimes we say things to the voters, and then we are legally and technically in compliance, but sort of perception is that we are not, because your example is the fuel tax. We use the fuel tax to offset property taxes, and property taxes stayed flat because they would have probably risen more. People thought they were actually going to get a cut. And so I guess my question is it possible that we will be legally and technically in compliance with this, but rates will still rise some significant amount, and the perception will be that we are violating it? I don't know if that's actually a question you should answer. It might be better for someone else in the mayor's team. But
I think that when you read through the whole thing, and what they've said about base rates, the idea is on a go-forward basis, the ratepayer would be better off than if ML&P had remained by itself. But to correctly answer your question, what that could mean is that as you continue to see inflation, it could be possible that rates go up 1% instead of going up 3%. As you'll see in here, Chugach has forecasted a great degree of synergy over time. It's not going to happen immediately, but over the next 10, 20 years, they expect significant savings of this transaction. But your statement is accurate. It could be that rates still, after all the savings and everything, still do go up.
Okay. But we are not, I think we've asked this question a couple times, we're not forecasting, Chugach is not forecasting, perhaps we do want to answer this, in the next couple of years, a large spike in rates, that whether or not they were associated with this, do you think that people of Anchorage would associate in their mind with that?
Yeah, Lee Fiebert with Chugach Electric, for the record. Yeah, we don't anticipate big increases. What we see is, as was said, you might have inflation pushing, you might have a reduction in consumer spending or for kilowatt hours, because what we've seen is people are using less kilowatt hours every year, and we're projecting that's going to continue to decline probably for the next 10 years. And so what you'll see is put on pressure because of reducing sales and just general inflation. You will have a tendency to have an increase in cost, but I think it's going to be very minimal. I don't see anything unless we see a big change in the economy. But what we've seen is it's just in that 1 to 2%, every quarter. So I don't see any major changes. But it really depends on what happens with the economy.
Let's hope the Obama boom continues. Mr. Dyson.
That's actually an excellent question, Mr. Chair.
You sound surprised.
Always the tone of surprise.
That with the merger or without, our whole area here has a significant amount of overcapacity generation. Is that true?
Through the chair, Mr. Dyson, I think that's a little bit of a misnomer, because if you look at the new generation, the efficient generation, we have just what we need. What is excess is the older generation, which is for reserve. So I think if you look at total reserves, I think we've got plenty. But I think when you look at what's economical to be run to make electricity, we're exactly where we need to be.
A very good answer. May I follow up?
Yeah, go ahead, Mr. Dyson.
What's the peak load, the highest peak load you run into?
For both
Yeah.
ML&P and Chugach, we're pushing 5. I don't know, 160. Yours is 160. Yeah, probably close to 500 between both utilities.
And what's our generation capacity total?
Over 1,000.
Okay.
So we have 2 times overall capacity. But for new, we're probably real close to that. We're probably
New efficient, Mark Johnston, ML&P. New, we have 170, 180. So we're just slightly above our peak with new efficient generation.
and we have probably 200 to 220. Plus we've got hydro and things that go along with it. So I think from our hydro resources and our new generation, we can meet peak. We right now run what we call peakers, which are the expensive units for about 50 to 100,000 megawatt hours per year. With the acquisition of ML&P, we won't run blue at all.
That's good.
And we will still probably have some energy to sell to Golden Valley, so we won't have 100% capacity.
I'm sorry, the last sentence, Golden Valley?
Yeah, we will have additional low-cost power to sell to Golden Valley at times. So
How much
it
is
won't
that?
go away.
How much is that the most you sell to them?
I would say it's going to be between 25 and 50 megawatts on any given period of time.
And how much are you selling to MEA now that their plant's running?
We could be upwards of 100,000 to 400,000, depending if they run their units or not.
Last week, we sold somewhere in the neighborhood of 7,000 megawatt hours to to primarily to MEA.
Yeah, so if I may just finish.
Yeah.
It's why the question is really valid. So we just heard this lady's testimony here. We got twice as much power generation capacity as we need. And the usage is ramping down as we all get more efficient electrical stuff and so on and so forth. So we've got all we'd ever want for the foreseeable future, for expansion, even some industry coming. So that's a significantly good question. Lee, is there any possibility of selling our old equipment?
I think very, very unlikely, but I'll give you an example, and I think this is really proves well, is this earthquake caused substantial damage to Point McKenzie, which is just across the inlet. We only have now one line to Beluga, so the maximum we could transfer from Beluga is 100 megawatts. So it really, we need this excess capacity depending on emergencies. You could have a gas disruption where we needed Beluga power. In this case, we're relying on generation on this side. So having twice as much as you need might sound like a lot, but in Alaska, where you've got the types of events that we have, we're very thankful that we do have it.
Thank you.
Thank you.
Thank you, Mr. Dyson. We have Mr. Croft, and then Chris, did you want to get in the queue?
Yes, please.
Okay, so Mr. Croft, I think you might ask the question I wanted to ask.
Well, okay, yeah, we'll see. So following up on that, is that 2-to-1 capacity, generation capacity versus usage your target? That is, given we're in an area that has remote and has some types of difficulties, is that where you want to be? Or do you have a different number? Is there a different goal that you have for our excess capacity?
Through the chair, Mr. Croft, that's probably more than what a typical utility would have. We look at like a 1.30, 1.3 times. So
we're at 2.0, if you will.
We're at 2.0 with double, but I think given the circumstances we're at, where we've got remote facilities, I'm not uncomfortable with 2, but it might be a little bit more than
would be ideal for
what would be ideal.
If you're sitting in the middle of Los Angeles, you may want only 1.2 because you've got all kinds of other options of things for that.
Absolutely.
Thank you, Mr. Croft. Mr. Constant?
Thank you. Since Mr. Siebert on the floor, Lee, is your board satisfied with the audit documents that they received relating to ML&P?
Through the chair, I'm not sure we have the audited financial statements at this time, so we are still waiting for those, and maybe they're in the mail, but...
Well, through the chair, this is Alex Lipka. So we are meeting today, the one final piece with, Wednesday actually, with BDO has been the impairment study for SAP. We believe most of the other work has been done, and we are very hopeful to have that audit work wrapped up as quickly as we can.
So, as a follow-up then, does that mean that your board is not yet comfortable in closing this transaction, or should we go ahead and vote on this?
Through the chair, I think, certainly we would like to see the assembly move forward with this. We see this as, the job's not done until the paperwork's done, and certainly the board has given me authorization to sign, but it's subject to getting the financials. I think we believe that they're going to be here within the next week. And then there's a number of schedules that go along with any transaction and just getting those completed. So we believe those will get done in time. It's just a matter of paperwork. The attorneys have been busy on both sides trying to get all these done. And any time you deal in a transaction of this size, it will take time to get the paperwork done. But we believe that it's still prudent for the assembly to approve, but then both sides work on making sure the paperwork's done within the next couple of weeks.
Thank you, Mr. Siebert. Thank you, Mr. Constant. Let's proceed. We got a little off track there. Let's proceed with the presentation.
Sure. Sticking with rate implications, if I haven't already, I just wanted to say that as part of the transaction, the parties have agreed to work together towards RCA approval. Chugach will make specific proposals to the RCA in terms of the rate-making treatment, both the approval of the transaction as well as rate-making treatment, including recovery by Chugach of the cost of the transaction. But as I said, there are protections built into the transaction around base rates, and the company has committed not to raise base rates due to the transaction. And the way that that can be accomplished is through savings that the utilities expect to be able to achieve by combining operations. And so this is often referred to as synergies, so bringing together two operations where the costs to run them combined are less than it would be to run them independently. Now I'm on page 13 of the presentation, and I think you've been briefed previously on the savings potential of the transaction. Chugach and its consultant NERA had previously identified a range of 8 to 12% savings for other utility transactions, and that's consistent with studies that we've done at Concentric, and other studies that are available indicate generally that range of available savings. Chugach does have an integration management office that is looking more closely at the savings potential, so it's not just a matter of quoting what's happened elsewhere in the industry. It's about looking specifically at the combined operations and identifying by function where savings can be had, and then quantifying where those savings can occur. And that analysis is ongoing. But Chugach has concluded more recently that its updated analysis is still consistent with what it had found previously, and the company still anticipates significant savings, and that, as is in the presentation here, in the $280 to $390 million range. That's just on the savings side. There are costs of the transaction. So still, though, on a net basis, so savings and then considering even the costs, the company still expects to be able to have net savings in excess of $100 million. And that's done over a period of time. That's not all day one. That's over a 40-year period, brought back to today's dollars. And it's important to recognize that savings, they will be passed on to ratepayers as they occur. So it's not a matter of just saying today what they're going to be. They do need to occur and then get passed through to customers over time. And again, that's over, that analysis with those numbers is run over a 40-year period. So on page 14, I just have some conclusions about rate implications that I'll run through. Again, the Regulatory Commission of Alaska does have jurisdiction both over the approval of this transaction as well as ongoing economic and rate-making regulation of Chugach. Chugach will seek, as part of the transaction application, specific rate-making treatment of the transaction, including approval of it clearly, as well as approval of the PPA, and then approval of the ability to include the cost of the transaction in rates. But there are, however, protections for customers around increases to the transaction, and that that Chugach is committed not to raise base rates to the transaction. And again, there are significant savings potentially to be had that the parties expect, and so that's the format by which the combined utility can provide benefits to customers, is through being able to combine and achieve savings where they couldn't otherwise as independent entities. All right, employee considerations, and this is page 15. Chugach, as part of the transaction, will extend to existing employees offers and maintain an overall package of compensation and benefits that is similar. And again, the main commitment in the transaction, which is consistent with Proposition 10, is that there will be no layoffs due to the transaction post-closing. And again, Chugach will annually confirm with the municipality that they are in compliance with Proposition 10, including that employee commitment. I just spoke about synergies, and there are synergies associated with employees, but it's not a matter of layoffs. It's rather the savings are anticipated due to attrition and retirements, and that is expected to occur over time. And our understanding is that Chugach currently expects about a 15% headcount reduction, again, not from layoffs, but through natural attrition and retirements. And so as employees retire, there's opportunities to not necessarily to fill those roles, and that's how some of the savings accumulate over time. A word about the RCA approval standard process, and this is page 16. As I said, the RCA has jurisdiction over the transaction. The RCA's standard is that the transaction must meet the public interest, and that the buyer be fit to operate the utility, and that is looked at in terms of managerial fitness, technical fitness, and financial fitness, and that they be willing and able to continue the company's operations. So there are other examples from RCA history of approvals of transactions where they've reviewed transactions and they've spelled out some of their standard that they use in terms of their analysis. And again, it gets back to that public interest, looking at what could occur to rates, looking at protections that are in place, looking at the fitness of the utility to operate, looking at commitment to Alaska, and here I think where we have the utility already operating in Anchorage, that would clearly be, fit that, what you would assume would fit that standard. And they'll look at the overall financial plan of Chugach and do their own careful vetting of the entire transaction in order to be able to determine whether the RCA can approve it. And again, that is a step that has to occur for the transaction to move forward. As I said, the companies have agreed to work together and use commercially reasonable efforts to do so in order to seek the necessary approvals from the RCA. And they have committed to file an application with the RCA within 75 days of the signing of the transaction documents. So I have two.
Go ahead, Mr. Wellington. I'd say we started this a little late, so we're going to go a bit past 2. Go ahead, Mr. Wellington.
Do you see any further risk
I mean, that's clearly at the RCA's discretion, and they will do their own careful analysis. And what we understand about the standards in terms of the public benefit and the fitness of the purchaser, I think that Chugach has a strong case to be made before the RCA in terms of its ability to consolidate the operations. It's already operating in Anchorage, and then to further explain the savings opportunities and explain how customers and employees will be protected. So I think those are things that I would expect the RCA to look at and consider. They will apply a careful due diligence of their own, so that there is risk around the approvals. But again, I think there's a strong case to be made for this transaction meeting those standards.
I guess a quick follow-up that Mr. Thompson, is it Thomas or Thompson?
Thompson.
Thompson. So you're our RCA attorney, right?
Yes.
RCA guru. And actually, maybe this isn't a question for you, maybe this is more for the administration. I know we touched on this last time, but should a particular portion of it be found partially or completely unacceptable to them, like the PILT, for example? What is the process by which we take that into account? Does it kill the whole deal, or is there some way to shift that monetary amount to some other portion of the transaction?
Through the chair, I think we walked through this before, but basically the deal document, the asset purchase agreement contains a structure whereby we go to the RCA, we ask for RCA approval, and then we look at what we've gotten back from the RCA. And if essentially, generally, we're committed to close unless there's a material adverse impact on the transaction, which is caused by any conditions imposed by the RCA on the transaction. And what that is isn't explicitly defined, because it's one of those things that we cannot explicitly define. We're not sure what we'll get back from the RCA. If there is a determination that there's a material adverse effect of the transaction, Chugach is no longer obligated to close, and then we see what we
So if you would continue with the, at the end of your presentation, maybe go one more page, two more pages.
Yes, I just want to run through our findings. And the first page, which is page 17, we wanted to line up what the voters voted on Proposition 10 and then assess how the transaction outcome matched up against that, the vote. And so in terms of the three of the key elements of that proposition, overall competitive value of the transaction of $1 billion or more, retention of employees and no layoffs to the transaction, and no increase in base rates. Clearly this is much more than a check-the-box exercise, but we did want to make sure that we looked at the outcomes to be able to establish affirmatively that this transaction does meet what the voters voted on. And that's the intent of that table on page 17. In terms of our overall conclusions, and this is on page 18, and again I've broken it down into looking at the transaction, looking at financial considerations, rates, and employees. Our view of that is that this is a transaction with strong value and protections for employees and rates, and that our view is that the MOA has acted prudently in moving forward with it and consistently, as I just said, with the ballot proposition. In terms of financial performance, our assessment is that it is likely that Chugach can perform on the transaction, on the terms in the agreement based on what we know today, and then further based on the regulatory approvals that are being sought being successful and consistent with what Chugach has proposed. There are risks to the transaction, and I've highlighted those in the presentation. But again, we do believe there are mitigating factors in place that help to control those risks. And then in terms of rates, again, the RCA does have jurisdiction both to approve the deal, they must do so for it to move forward, and will have continuing jurisdiction over the rates charged by the combined utility. Chugach will seek approval to flow the cost of the transaction through to rates, and is also committed not to raise base rates to the transaction. And again, the reason that the factor that contributes to that is the ability of the combined utility to achieve savings in operation costs. And again, as I said, synergies, they have been estimated today. The way that they will impact customers is when they actually occur and then get flowed through into rates. And then finally, employees. There are savings as part of that synergy savings analysis that do reflect attrition and retirement, but there is a commitment both to extend employment to existing employees as well as to not lay off employees as a result of the transaction.
Thank you. All right, I have a question, and then we'll go to you, Mr. Dyson. So my question for everyone involved in this, actually. So we were making this very large sale based on a set of known assets that were intact. We just had a major earthquake on Friday. Do we know that all of those assets are still intact that we're selling to Chugach? And if we discover later that some of them are damaged, is there some mechanism by which the price is adjusted?
Through the chair, Mark Johnston, ML&P, yes, our assets are still intact. There are issues that resulted from the earthquake, but we are in the process of fixing those and expect to have that done fairly quickly.
And to the second part, go ahead.
Yeah, in terms of the liability for that, I mean, at this point, we still owe the assets outright. We haven't even signed the transaction documents yet. The risk and the responsibility for making those repairs lies with the municipality. It will still lie with us once we sign the documents as well, up to the time which we close. I'm anticipating if we have a fairly significant delay between signing and closing. I anticipate that by then we will have identified and rectified any of the issues that have arisen.
Great. Mr. Dyson, you have a question?
This may have been covered before, but from the administration probably, can you give me a minute-and-a-half summary of what the PPA payments are for that transaction? That's the inclusion of power.
Yeah, I have to say, I believe they're actually attached to the back of the PPA. Just in a second, I can pull them up. Do you want to know what the actual dollar amount is?
No, I just want to know what the structure is. It appears to me that Chugach is barring a contract, or assuming a contract that ML&P already has.
No, it's a contract for the power from the Eklutna generating station. So the power that is produced, the ML&P share, Chugach is signing a contract with the MOA to purchase that power that is produced.
That's what I think I just said, but good. I think you said it better than me. So the ML&P is getting we are getting a sum of money for Chugach to be able to assume that contract?
You are getting payments, annual payments for 35 years, yes.
And the same as we were getting before?
Before we were getting the power.
Yeah. Before you were, our customers, ML&P customers, were getting the power. The city wasn't necessarily getting the benefit of those sales.
That's what I tried to say before. Okay. So no money is changing hands because of Chugach assuming the same responsibility that ML&P had?
No. Money will change hands in this instance because the MOA will retain the asset and sell the power, and as a result, they will pay the MOA payments, annual payments for 35 years. So money does change hands in this instance. In the way that it is currently, ML&P customers pay for the power that is produced by the Eklutna generating station.
And Eklutna company, Inc. gets nothing out of the fact that this is transparent to them.
That is correct.
Thank you. Thank you, Mr. Chair.
Thank you, Mr. Dyson. I don't think they own part of the facility. Mr. Peterson.
Thank you, Mr. Chairman. And so, when Chugach Electric acquires ML&P, it's going to change their debt-to-equity ratio. And so, is that something the RCA is going to look at that could affect their approval of the deal? And would that, if they had an increase in debt-to-equity, would that hurt the potential interest rates that they might have to pay on their loans?
It will be something the RCA looks at, and it's one of those credit metrics that the rating agencies look at. It's one of 5, and so it's given a weighting. Chugach is expecting its debt ratio to rise initially, and as the debt gets paid back over time, the plan would be to revert it to something more akin to what's in existence today. So that is one of the metrics that will be pressured, as I discussed. That doesn't necessarily mean that interest rates would rise per se. It's one of the factors, and so it will have to be balanced in terms of the overall financial picture as well as the qualitative picture. But it is one of those pressures that I described.
Great. Thank you.
Thank you, Mr. Peterson. Any other questions for any of our folks in the room? Mr. Constant, do you have anything?
Nope, looking forward to tomorrow. Thank you.
Mr. Trainee?
No, thank you.
Okay, well, we can take a minute for audience participation, or if there's anyone from the administration that wants to say anything additional.
This is Bill Falsey. I've been barely paying attention working on other things, but while we're all here, and we have all the utilities here, I just want to say thanks again. Utilities are incredible work over the weekend. We all appreciate it.
Thank you, Mr. Falsey. Mr. Dyson?
Yeah. I had scheduled the head of Homeland Security for the state to speak at Wednesday's public safety meeting. Haven't been able to get back and charge the guy. I think he's distracted.
Mr. Falsey?
We met, and he mentioned that he's blaming Fred Dyson for this entire event. Fred talked to him about volcanoes. I don't want to hear it.
Good. All right, but is he available for our Wednesday meeting?
I don't know that yet. We have asked the Department of Homeland Security at the state level and FEMA individuals, Mike Sutton, Mike O'Hara, to come to the Assembly chambers on Tuesday to go through the update. We have so much business on Tuesday, we don't want to spend 2 hours chatting about all the rules of the road. We want to get maybe 15 minutes from them, and we're working to schedule a separate work session. I just got email chatting on it.
So I'm trying to reach him, and I'm cheerfully cancel our meeting on Wednesday if the guy's overloaded. You know, so if you talk to him, you know.
Okay. All right. Great. Anything else? Members of the public? I think. Oh, Mr. Thieber, please.
Just as a member of the public, you know, I think the mayor's team just did a fantastic job in informing the community with the press releases and everything else. So my hat's off. You've got a great administration. So as just a member of the public, thank you very much.
Thank you. And I think the closure of the Seward Highway, the Glen Highway, unfortunately prevented Mr. Carl Haberman from joining us today. So I don't see any other people to testify. So I'm going to close this work session.